Joining me now for a closer look at what's playing itself out in that market scene is Craig Pheiffer from Sasfin Wealth. Craig, an absolute pleasure. Good afternoon to you.
Hi, good afternoon.
All right, Craig, a bit of a choppy one, a little bit of green, but mostly red in Europe and here at home. I'm just keen to get your thoughts on what could be driving sentiments this afternoon.
Well, there's a couple of big announcements we're still waiting for this week. The FOMC meet tonight. There's absolutely no expectation that we'll see any move on interest rates there. So it will just be of interest around the narrative around the future direction of interest rates. The market, when we started the year, was looking for 3 rate cuts, even more. We've got that down to maybe a 50% chance of 1 cut this year. So any little bit of news around the narrative there. We've got the employment data also out later in the week. So all of those painting a bit of a picture around US interest rate policy, which is very key for the markets. But then also we're still in the throes of reporting season. And I think that, in the S&P 500, another big week. We've got Apple coming out on Thursday. We've got Amazon later today. And a number of other companies that, we follow quite closely. So a lot of news flow and maybe just also, I suppose, a little hesitation against most of the world off tomorrow. The US still open tomorrow, but we'll put our legs up tomorrow.
I must ask you, Craig, also we saw a Eurozone inflation came in at just over 2.4%, the headline number, and also very interesting to see a GDP of 0.3% here. Keen to get your thoughts on Europe as a market and how that could be also, be a decider in how markets fare today.
Yeah, I think Europe typically plays a bit of a secondary role to the US, but nice to see the expectation was that growth would pick up to be positive again at 0.1%. So 0.3% is a little ahead of expectations, but that's a good thing. I think it doesn't detract from the interest rate story on those shores. Neither does the inflation print of today. I think the ECB have well signaled that rate cuts are coming in June. We'll see a couple more of those rate cuts during the course of this year. So I think the UK and the ECB and the rest of Europe are set for cutting rates before the US does this year.
We are also anticipating, and as you've mentioned, Apple to be out with a set of numbers this week. We've seen Samsung come out and they've clocked a 10-fold surge in their first quarter profit here. Are we still comparing like for likes if we look at Apple versus Samsung, Craig?
Apples versus Samsungs. Yeah, I think we are. I mean, Samsung is, maybe a bit more of a broader, let's say, consumer provider of they do fridges and TVs and the likes that an Apple doesn't. So maybe it's not truly a fair comparison, but Samsung has overtaken Apple in the recent weeks again as the producer of the most mobile phones in the world. But we're still Apple fans. We think Apple will still have its day. Although I think it's going through a bit of a slow patch in terms of growth at the moment. But let's see what ideas they come up with and where they're headed as far as AI goes. And we haven't had any news on that front really as far as their mobile devices go. So it could be an interesting release on Thursday.
And on Amazon, we're expecting that out later on today. I keen to get your thoughts on that one. They have been speaking about cutting back on costs, trying to boost their margins. Is this probably the most important part of the set of numbers coming out of Amazon?
It is a very important part. It is a key company and a key holding in many global equity portfolios, I guess, for funds and individuals. So it remains to be seen how Amazon continues to reinvent itself, how the web services, how AI is developing in that front. It does all come down to margins at the end of the day and then bottom line profits. So we want to see where they can drive efficiencies, how that improves the margins and really how it improves the earnings on the bottom.
Staying with the Magnificent Seven, or whatever we're deciding to call them today, it could be the Three Amigos or the Fabulous Five. Tesla, we saw that share price rally 15% yesterday. They seem to have managed to really get through some regulatory hurdles in China. And of course, last week was not a great week for Tesla, Craig, but this week proving that just a little bit of good news can really change the fortunes of a company overnight.
Yes, I mean, even a week ago, people were writing Tesla off. We still believe in the longer term outlook for the company, particularly in the, the artificial intelligence space, in the battery technology, and not specifically only as just an automaker. And I think that, the market also there, it blows hot and cold on that stock, well, Elon Musk blows hot and cold, but I think the bigger term, longer term picture is still intact, but it is a bit more of a white knuckle ride. We've kind of, my colleague has renamed them all the good, the bad, and the ugly. And Tesla was in the ugly space for a while, but maybe it's just having a little bit of a reprieve.
Speaking about companies that are seeing some difficult times, MTN Nigeria. I know lots of investors, Craig, often choose to stay away from MTN just because of that Nigerian exposure and the volatility that we're seeing there. Keen to get your thoughts on this business. They have come out to say that, they are reporting first quarter losses here expected. But I think maybe the question is how long can, MTN Nigeria continue in this environment where they've got those reforms going?
Yes, it is a tricky one, and I think that where there is uncertainty, it does keep investors away. And you do that Nigerian, I won't say Nigerian influence, the Nigerian operations, just operating in that country, has its challenges, as we've seen for many a year. The challenge this time is around the currency, the operating environment, as mentioned, inflation running at 33-32%. It's tough to make real earnings in that kind of environment. And as you say, reforms, one's never sure of regulation. So it is, there are a couple of reasons to just stay away and wait for dust to settle.
And then, Craig, before we move on to your stock pick, I want to get your thoughts on We Buy Cars here. They say their core headline earnings for the half year have increased by as much as 29%. But if we factor in listing costs, they report a loss. I think it's fair for us to not factor in, those listing costs. They really are a once-off. And maybe then it is accurate for us to look at the core number for now.
I think that's right, but I think it's also early days with We Buy Cars. I'd also rather wait and see how it plays out over time.
We'll be watching that one very closely. Also keen to see it, Craig. Before I get your stock pick, I'd like us to reflect on counters that have found favour with your industry peers.
It's going to be Amplats again. I just think the relative underperformance of Amplats versus Impala and Nordems is too disconnected from the fundamentals of the company. PGM prices are supportive of Amplats as well, and I do think that whatever deal that gets brought to the table is not going to involve an unbundling of Amplats or Kumba, which then removes that overhang, and you've got that large short interest to actually support buying in the share price.
So my pick tonight is a play on the Chinese economy and the real sharp end of it, which is Chinese tech. So it's the Crane Shares CSI China Internet ETF. And really what we've got here is a very unloved asset class. People are calling it uninvestable in some circles. But what you are seeing is signs of life coming through. Regulators are really starting to think carefully about how they regulate certain sectors like gaming. We've seen approvals come through for Tencent last week for a new game. And that's really doing a lot for investor sentiment, which has been massively depressed. So you've actually got an economy that is still growing strongly, although below potential. They're starting to beat GDP estimates, and that could continue. So, you've got decade cheap valuations. You've got low correlation to US equities, which I think is attractive. And I think there's the potential for a massive surprise to the upside with names like Alibaba, Tencent, and JD all in this ETF.
My stock pick for today, and somewhat topical, I suppose, with the Ukraine aid being passed through the House and the Senate in the US recently, is a defense stock, Rheinmetall. We don't get exposure to defense stocks locally, so we have to seek them out offshore. It's the fifth largest defense stock in Europe and the largest in Germany, and they do largely what I would call some of the simpler stuff, but in they're the world leaders in terms of mechanized armored vehicles, and they do a lot of components that go into other weapons systems. And the other big thing they do, which they actually manufacture locally in a JV with Denel, is shells. Shells is artillery shells, 155 millimeter NATO, is what is fueling this war in Ukraine. So amongst other things, the aid package has freed up financing other players globally to go and source shells on Ukraine's behalf, countries like the Czech Republic, and then there's budget to replenish those shells. Somebody has to replenish those shells, and Rheinmetall sets to benefit. So it's a really nice play. It's already done phenomenally well over the last year, and it'll continue to benefit from the rearmament in Western Europe as well. So from that perspective, it's a very cool play, and quite a bit cheaper than some of the American defense stocks.
All right, Craig, keen to get your thoughts on some of those. Amplatz, Rheinmetall, but also the Crane Share CSI, a China Internet ETF.
Yes, I think, Anglo Plat, good company in the headlines at the moment as well. In the platinum space, probably the stock that you would want to be in. But I think you have to buy into the underlying thesis about, the platinum group metals first. And I think that could still, we're still seeing an increasing percentage of new vehicles in the EV space, electronic vehicles, less and less demand for platinum. On the flip side, we are seeing more efficiencies being driven out of these mines, which is cutting ounces out of production. So we could see some price increase in the underlying metal, but I probably I'd rather stay away there for now. But it is, it depends on your view on the platinum price, but it is the best play in that space. I think on the China ETF. Again, maybe there's in the, like we're talking about MTN Nigeria and those uncertainties, there's still those uncertainties, from a regulatory point of view in China. If things do play out well, I think this ETF will also do well. So I'd put it a bit more in the speculative band. It's really horses for courses. Which portfolio you're going to put it into, or is it a widows and orphans ETF? I'm not so sure, but maybe one for the longer term in the back draw. Not a bad ETF. And then there's Rheinmetall. It has done incredibly well this year. There's been a lot of discussion around defense stocks, particularly with all of the geopolitical tensions and the wars that we've had at the moment. They've been very topical. One would just naturally expect them to do well in that kind of environment, but it does boil down or come back to the amount of increased spending, military spending that goes on. We've seen in the US sort of 3% of that budget going towards that. So there are funds going towards this, but do they continue to flow? And military spending is a very political process. So it can be a little uncertain, and one's never sure how those funds will flow. I think there's also, I won't say an ESG concern, but there are ESG limitations on in some mandates and cases around investing in defense kind of stocks, or these types of stocks, which may just impact valuations, and even with the company's growing earnings over time. But it's had an incredible year for sure.
With that said, Craig, which counter are you loving this afternoon?
I'm loving, and maybe just more than just this afternoon, is a company called Thermo Fisher Scientific. It is in sort of the life the life sciences space. We typically refer to it as being in the picks and shovels business in the healthcare space, providing a lot of the machinery and the tools for those pharma companies and the medical companies to get on and do their development, the test tubes, at a very simplistic level, to supply to the laboratories, and that's why we call it the picks and shovels. They really supply all kinds of instrumentation to get healthcare going and keep it going, and help get us to new developments in the space.
An absolute pleasure speaking to you today. Thank you so much for your time. That was your midday markets update with Craig Pheiffer from Sasfin Wealth.